The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 21st. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely loves, well, being here with you. Sorry, I was multitasking there. But you know what I love. I love being a pioneer of my future versus a prisoner of your past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us. Not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine, 877-927-6648. Internationally, 727-445-1044. You can always send me an email, steve@tfnn.com. Just in that subject line, put radio show question. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down 55 points. He's trading out at 21,411. S&P is up 3.5 points, trading at 24.33. NDX 100 is on fire. Well, sort of on fire. It's leading the charge the upside, whatever upside there is, up 35 points, up nearly 0.6%. Russell 2000, that's trading off. It's basically flat. It's down 1.5. The semiconductors are up 8 points as well. Gold is up $3. Interesting. Silver is flat or down 4 pennies. Light sweet crude back $1.20 right now. She's trading out at 42.30. Natural gas is off just a bit. The treasuries are pretty much flat for the most part. Leading the charge, though, to the upside is the IBB biotech sector, the biotech sector. The IBB itself is up $9.50 or 3%. Regenerative Pharmaceuticals, you and I identified that moons ago, or at least last moon. That's up 24 points. That's got much further to run to the upside just to complete its measured move from a consolidation standpoint. Priceline is up $13. Biogen is up $9. Red Hat is up 9. That's 10%. There's a number of issues moving to the upside. To the downside, biggest loser dollar-wise is AutoZone, down $13, 2.25%. Chipotle down 9. Circor International off about 8. Equinix down 6. O'Reilly Automotive down 6. So we've got some things to look at to the downside as well. But I want to look at what you want to look at. And so the first question that was posed to me inside the Tiger's Den from our man Z was, and let's go take a look at the chart here. He's looking at the 30-year Treasury yield out here. That's what we're looking at right now. It's trading at, it's about 2.7. And the question is, let me find it. Where is the question here? May test exceed the deflation. The question basically is the gap here that was created in the Treasury yields back on November 9th, election night. The question is, does this gap need to get filled out here? Now, what I should have done on this other chart, I can't do it right now. I'm going to answer that question as best that I can. How will we know when bonds have topped? Isn't that really the question? As well out there. When will we know if the 30-year bond has topped? Because these two are going to be inverse to each other. Does this gap have to get filled? Is another question out there. And what I will do during the break, so I don't waste a lot of time, is I'll go ahead and, because it's easier for me to put up another chart, and just show each of the gaps in this case here to the upside is what I will do, and we'll see how many are unfilled out there, and that way we can either say, hey, with regard to Treasury yields, no, either guess gaps have to get filled or no, they don't. But here's what we know about the 30-year Treasury yield. Right now, it's targeting 270. That's going to complete an A to B equals CD. It certainly is moving into a sign of strength. We don't need volume on this just to look at that wide price spread out here. Wide price spread, big move to the upside. Remember, gaps are nothing more than a wide-ranging bar. So if you have the perception that a gap must get filled, then you must also have the perception that a wide-ranging bar must get filled, because they're almost really one and the same out here. Now, not exactly the same, but boy, they are PDC, pretty darn close. To answer that question, though, it looks to me like the 30-year Treasury yield wants to move lower. How will we know? And that first target is going to be 270. By the way, what I'll call the top of the gap would be the November 8th area, and that is $2.64. The 1 to 1.2728 to B equals CD to the downside is 260. If I try to identify, and here's this, here's the other set of tools and charts out here. How will you know if, in fact, the interest rates here in the 30-year have, in fact, have bottomed? One thing you would do is you would see it close above Stevie's red line. And right now that's at 2.78. You can see when the most previous high out here, this is back on the March 13th area. We can see when that high was created. You had a nice little TD sequential count. That happened on March 9th. You had a nice little TD setup 9 count. That happened on March 13th. And then once price got underneath Stevie's red line on March 16th, then, in fact, things started to fall apart. You had a nice little counter trend rally. But if we take a look at its price oscillator down here on the bottom portion of the screen, that price oscillator never got above zero. In fact, it turned right back down below zero. That actually did it on May 18th. That was another signal. If you just take a look at the yield chart out here, that in fact the 30-year was ready to run higher and that the yields were going to continue to run lower. Works this way. This set of tools that you and I use works this way on everything. It doesn't just have to be an ETF, a stock, an indice out here. It works that way on everything. So in that case, you're going to want to be watching that Stevie's red line, 278. You want to see if you get a bullish reversal signal. And as long as we're out here, let's just simply go down, because for those of you that aren't following the yield and instead you're following the 30-year, let's just go ahead and put that chart up on our screen, see if we can get to that before we go to the break. My goodness, I have a number of instruments out here. I think probably need to go ahead and shed a few of those. But we'll get down to the Z's pretty soon here. And so what we're going to look for here is Stevie's red line marker, because the run higher in bonds will fail when it closes below Stevie's red line. And you'll see that's right now priced at 155.77 out here. So that red line is held as a support level really for quite some time out here. So do I see yields coming lower and bonds moving higher? The answer is absolutely. So that is the answer. And during the break, we'll go take a look and see if I can figure out all of the open gaps, or many of the open gaps that are out there. In the meantime, which is only about 15 seconds or so, we come back from this break as well. We're going to go take a look at the Dow equity futures contract. We'll take a look at the Dow and the NQ. We'll put them side by side out there and to see which way this market really wants to go. We'll go look at that tug-o-war. This is Steve Rhodes with TFNN. Dow's off 52, S&P down 3.5. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So the chart that's up on our screen right now is taking a look at 30-year yield, and the blue horizontal lines out there are showing you where there's open gaps. So if you are a believer that all gaps get filled, then this would say that the 30-year Treasury would get all the way down to at least 215. That's a gap that was left from July 12th. Between July 11th and July 12th, or July 12th and July 13th. Sometimes my date on this chart out here is off by a day. But that's the basic area that you would be looking at. Am I a believer that that's the case? No, I'd be looking for patterns to set up out here in A to B equals CD to the downside as we looked at, or some other pattern inside of the 30-year. And I think the pattern that I would most be paying attention to would be Stevie's red line. So I hope that helps you out. Now, I said we would go ahead and take a look at the NQ. Really, I said the Dow and the NASDAQ, I believe. But it's really going to be the NQ and the YM. So we're going to look at the daily equity futures contracts. The NQ is at the top. You can see that, or if you can't, you're just listening. That's what we have at the top of our screen. At the bottom, we've got the Dow. And this is where the little tug of war is going. Now, both of these charts are still bullish. Both of these charts have a pattern that suggests that the market wants to pull back. But when a market wants to pull back, it pulls back to support. Now, if you take a look at the Dow equity futures contract, you're going to see it's trading at 21,370. Stevie's red line is basically 21,370. If we try to get the exact price, which we can, let me do this for you. I'm not really worried about a buck or two, though. That's the whole thing. But I'm going to go ahead and give you, we like to be exact out here. So if we take a look at where Stevie's red line and the YM is as we speak right now, it's at, that can't be right. Why? That's weird. I don't know. Let me see here. What happens? Does that work? Oh, there we go. Okay. Well, that's weird, too. Sorry about that, folks. It's weird when it doesn't work the way it's supposed to, isn't it? 21,372. We're at 21,373. So watch this area, because if price tests and rejects it, then in the case, and now we're looking at daily timeframes out here, which I think is really more important for each of you out there. then the message is that level of support. Now, in the case of the NQ, all the price really did earlier, about 4:30 in the morning, was get back to test its trend line. That's a trend line coming off, and we're talking about the election and take a look at the yield. If you take a look at the election bottom inside the NQ, when it had that move down overnight, 12:30, 1 o'clock in the morning, things started reversing, and reverse it did. But if you take a look at that trend line, and I'm just using, in essence, the bottom of it looks like April 17th as the next touch point, because that just lines up with several different hammers and bullish candles out here, another bullish candle today potentially inside the NASDAQ. But what is containing price out here, and I don't know who's going to win this battle of the bands out here. But if price were to close above 5807.51 inside of the NQ, if we were to do that today, I would tell you that the battle of the bands has been won by the NQ. If price closes below that trend line, where's that priced at? Right around 5,700. So it's another 70 points or so to the downside. If that occurs, we're likely to also then see the Dow finish below its price oscillator, and then we'd have confirming message that prices are going to continue to move lower out here. We can go take a look at all the intraday stuff that we want, but this is really more important. Now, what should the markets? So the markets are giving us a series of conflicting signals out here. Now, that's an important one that you and I just looked at, because those are key levels of support that if they're broken, then they tell us about a market that wants to move lower for a couple more days out here. If we go look at what's going on in the advanced decline oscillator readings, you've got the New York Stock Exchange reading is minus 83.47. It's got further to fall. If you take a look at the NASDAQ composite, it's just at minus 27. Really not a big, huge deal out here. If we take a look at the Dow, I'm going to go ahead and explode this up on the screen. Explode's probably not a word to use these days, but I'll blow it up on the screen. What you can see is it's still slightly above zero. Now, this thing got above zero. Just take a look at the advanced decline oscillator reading back on give you the right date here, May 22nd. And it's been above that. You can see that the Dow has been on a tear. You haven't wanted to really short the Dow with price being above because this is telling you that buyers are in control. This is not anything new. You've known this. Now you can visually see it. So if that oscillator gets down below zero, it probably just takes one or two more issues to get that below zero out here. Then it would be syncing up with the NASDAQ and with the New York Stock Exchange. What you would also want to see, I love saying this word, simultaneously. I don't like really saying it that much. But what you should see then occur as well is the spot VIX index close above its 50-day exponential moving average. 1109 is the number. Right now it's trading out at actually, on this chart, it looks like it's trading out. I can't tell you. Let me do this here. Let me come over to the VIX page, and then I can. It's trading at 1092. So it's trading at 1092. 1109 is the number to be watching for. If you get a close above that, you get the Dow and the NQ to close below their levels of support out here. The clear signal, as clear as I can provide to you, is that we should have a few more days, at least a few more days. Now, many people are calling for a major top out there. Let them call for it all they want. And I might join them if I see some other signals out here. Now, what would be one of those signals? Well, let me come back to, what would be one of those signals? That's an excellent question, and I am glad that you asked that. One of those signals would be this little summation tool. The very bottom of my screen, you see it's positive 86. It flips back and forth, but right now it's 85.97, so to switch back and forth there. If that gets below zero, then that starts to create some potential problems. That's the message inside the general market if we're going to use the New York Stock Exchange for that tool. And I can only use this tool, in essence, on the New York Stock Exchange to give you a really good analyzation to help you understand what's going on inside the market. But it's still above zero. Now, I won't be using this. So subscribers and I will be using my modified version of this, which is an even better tool and indicator out here. But we're not going to go into that. But that's what subscribers will get, and then they'll know what action to take, if any. But what I'd really like to see, and this is just, I'm looking for a gift out here, and I'm not the kind of gift there I'm saying, please send me gifts, although if you want to, but the type of gift that I'm looking for from the trading gods here, the type of gift that I would like to see, if my theory is correct out here, and right now it's just theory, it's still a really good theory out here, would be for this advanced decline oscillator reading. Okay, so this is shorter term. The bottom is nothing more than the accumulation of all of these readings out here. And if we take a look at what I'd really like to see is for this line here, right now it's minus 83.17, to get down to the minus 150 area, minus 150 or below. But 150, and then for the summation index of that oscillator to remain above zero. You might say, what in the heck do you mean, Willis? Well, let's just look at other examples. If we take a look at back here in the trading session of June 27, that oscillator reading got down to a minus 165.37. I can guarantee if we go back and look at the archive of that show, I was saying, okay, time for a bounce or bottom. But look at that summation index. Where was it at? Above zero. The reading back then was 546.09. Did that form a nice bottom? Yeah, we can go back. We come back from this break. We'll go look at several others out here, such as the one from May 19th. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Hey, it feels pretty good. The throat, you can tell the energy is, compared to Monday and Tuesday. Monday was just horrible, but you can tell I'm coming back, long and strong out here. Now, I think what really spurred it on is I've started this cleanse. You might not want to hear about it. That's kind of not too much information. A little TMI. Now, I started this cleanse. It's called. You guys can look it up if you want. It's called the Detox Prescription. Maybe some of you have tried it. It's a guy, doctor, his name is Woodson Merrill. And after doing a bunch of research, I decided, and it's a detox. Yeah, I sort of needed a detox, I think, with regard to all the things that I have consumed out there, and seemed like a good idea at the time. And I think Monday, that was detoxing into the throat and everything else, and the same thing with yesterday. But after solid day 3 of it, seems like we're getting back. That's going to be like a 21-day deal out there. I have not yet figured out how to integrate the sake into the deal, but I'll probably deal with that tomorrow night. In any event out here, we're back to the New York Stock Exchange. We'll take a look at the advanced decline oscillator. That's in really panel 2, where you see the plus 150, minus 150. We're focused on the minus 150. We're taking a look at the summation of all those readings out there, which right now inside the New York Stock Exchange is above zero. Therefore, it remains bullish out there. So you kind of have this little intermediate term time frame, and you don't get too caught up into the daily noise out here. And just like we were talking about, when you get down to the minus 150 area, when you get down to the minus 150 area and you're above zero, you see some nice opportunities for either very good bottoms or bounces out there. And that's really what this chart is showing. Likewise, just the opposite occurs when you get down into the minus 150 area, just as it did back here in October 2016. You got down to minus 150, and that summation index was down below zero. That's when you have that negative sentiment. So watching the two of these to see how they play out is going to be very important to help us identify intermediate, maybe even longer term, what the markets are communicating to us. But as we can say right now today at 1:32 in the afternoon, the message is clear. It's still bullish markets out here. We're just, and in fact, that's when we see the NDX doing what it's doing, bouncing off of support. The semis, I didn't look at those out here. It's all really kind of fit into a picture of a market that sort of wants to retrace during the time period where it should have no problem doing it, because seasonally, this should be the time period. The mere fact that it's putting up the fight like this, that should be sending a huge message to everybody out there, both sides of the trade out there. All right, so a question comes in, says, would you kindly do your pattern targeting deal? I like the deal on the IGV. So let's go take a look at the ticker symbol, IGV. That is the North American Tech Software, sector. And in order to do my deal, I got to put it on both charts. Otherwise, it doesn't help us a whole lot. So let me get that one going, too. Right now, that's trading at 138.96. I don't know what the holdings are in there, but I might as well give them to you. We might as well do it, right? If we're going to do it, we might as well do it right. So let's see if we can actually get that IGV and see who the top 10 holdings are. Is that possible? So you've got not applicable as number 1. That's kind of interesting. That's got 9%. I don't know what that means. But you got Microsoft, Salesforce.com, Oracle, Activision Blizzard, Electronic Arts, Intuit, Autodesk, Symantec, and ServiceNow. And those holdings, let me add these up. 1, 2, 3, 4, 5, 6, 7, 8, 9. I don't know who the first one is, but the top 10 holdings, which is 9%, make up 60% of this ETF. So it would be good to really, and we're not going to do that during this show, is to go analyze those 10 just simply to identify, bullishness, bearishness, or what have you. But that's the weighting structure in here, and we'll get a feel for it when we take a look at this. Now, the very first thing, this chart here, the blue levels are going to be the daily market profiles, and price is trying to get above it right now. I'm going to just go throw the weekly on here. So what IGV needs to do in order to reassert itself from a bullish standpoint is just simply close above Stevie's red line. We'll put that up on our screen for you. You can see at this moment, price is traded right into it, and that is an area of resistance. If we're going to give you the exact number, then I've got to go back there and pull up that data box to see if I can do that correctly and quickly this time. That number is going to be, sorry for that pause, but 139.09 You're at 138.96. Does 13 cents make all the difference in the world? It does to me. It should to you out there if we want to go ahead and pay attention to Stevie's red line. Now, we can see that when price moved down, when this sector got blown apart along with the NDX, mostly caused by, if not entirely caused by, what was the name of that fund out there that was liquidating $8 billion? I can't remember. It doesn't matter. But that's really what was going on. You can see that nice little hammer candle that formed out here back on June it looks like the 13th out here. So that's your level of support. So it's trying to hammer out a bottom. So far, this is only a counter trend rally. But you get above Stevie's red line, and if you close above that, then what's going to happen? You're going to also close above the daily market profile today. And that price level, so you've got really two levels that you're watching for, 138.58. So if you get above that, you close above both, then what this says is that price is going to go ahead and run back to the top. Now, the top is either 140.50, the top, I'm sorry, 141.46. No, it's very simple. It says you run to 141.46 because that happens to be the top of the daily and the top of the weekly box out there. You don't see that too often, but when you do see it, you say, wow, that's pretty cool. And so that's where price would head to. Doesn't tell us whether price will go ahead and take that area out and then we're just dealing with some type of consolidation. But at this stage here, a little bit of a counter trend rally, just needs about 13, 14 cents more of a close to get back in to communicate to you that this wants to go ahead and run back to its highs in the 141.46 level. So I hope that that helps you out with regard to that trade or whatever it is you might be looking at there. Okay, so we've really taken a look at the markets by looking at the NQ, by taking a look at the YM, and on the daily basis to really get our heads wrapped around what things are doing. We haven't looked at gold, so we should do that, and we should look at the Japanese yen. So let's go take a look at both of those. And we take a look at the yen, not doing a whole heck of a lot. If we look at market profiles, pulled right back into a level of support out here, that being the center of the box. This really suggests to you and I that what the yen should have is some pretty stiff resistance at the 112.55, if in fact it can get up there. And if it can, that should be the place where this starts to detour, which should then go ahead and start to create some problems for gold bears, as it should turn gold around, should turn silver around, and should turn bonds around to the downside. Remember, we're looking at the 30-year, both the bonds, and we're taking a look at the rate, the yield. And another tool to use to help you identify when one is topping or bottoming as well, and it could be used for all these. And I can't tell you why it is, or I mean I could tell you, but you might not believe me. It doesn't matter. All we need to know is the correlation that's out there, and then we can agree to disagree upon the reason why. What we do know, though, is that if price is able to get up to 112.55, and that's the message right now, and bonds are just simply ignoring this fact out here. They're ignoring it. So bonds are super strong. Bonds are kind of ignoring the yen. But the yen looks like it wants to get to 112.55. That should put a world of hurt or some hurt inside of Goldilocks. Steve Rhodes with TFNN. Right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So if we take a look at Goldilocks out here and try to discern its message with the patterns that are in place right now, you can see that yesterday inside of gold, we're looking at the current August contract here, formed a TD setup count. That's number 9. That's a black number 9 that you see on my screen. Now, the problem here, so sometimes when you get to those are 9 consecutive, in this case here, 9 consecutive closes below the bar that was established 4 bars earlier. And if we take a look at, and sometimes those can be a leading tool to get you to the TD sequential. Sometimes just that tool on its own can identify a place where you'll see a price reversal. Now, if you're going to see a price reversal or a pause in what's going on, typically what you'll see is bar number 9 trade inside bars number 5 or 6. In fact, if you look at the TD setup count that formed out here on March 13th, that wasn't the actual low of gold back then, but that was your number 9 count. You see this close here was a lower close in the bar 4 bars earlier, right up here. So that was why you got the number 9 count. But what you can also see about bar number 9 was it traded both inside bar number 5 and bar number 6 during that trading session out here. That's a real good indication that momentum has waned. It is slowing down. So it doesn't tell you whether you're going to get a reversal. You got to look for other patterns and so forth out here. But it does communicate to you and I that momentum has slowed down. Now, someone might say to themselves, and I can understand this, that, hey, gold really hasn't done a lot the last couple of days. It's been like $2 moves out here. However, here, if we take a look at this little TD setup 9 count out here, this is on the trading day of, looks like May 2nd. If we go take a look at bar number 6, price never made it up there. Bar number 5 never did. What happened to gold? Continued moving lower, right? There was no stalling of momentum utilizing this momentum tool indicator. Well, guess what? Yesterday, basically, you didn't get up into either bar number 5 or bar number 6. So will that same pattern play out here? I don't know. But if it does, and it's likely to do so based on what we've seen so far in the yen, so we're going to leave it up to yen traders out there to decide where gold is headed to. At this stage here, this chart is suggesting to us that gold wants to get back in that May 9th level. Now, doing that will be a problem, or a potential problem, at least a trend problem out here, And you might say, what do you mean, Willis? Well, let's see if we can pull this back here far enough, and I believe that we can. And if we take a look at this little trend line off of the bottom back in December of the exact date, by the way, is December 15th, 2016. You remember that date. And we take a look at a trend line out here. Let's go get a nice little green arrow for the Green Hornet. And what we can see is that right now we're kind of sitting at a trend line. One was broken back here, okay? Price continued moving lower into this swing point back here on March the 15th. But right now, we're sitting right there on the trend. So if price gets below that, you can anticipate 1235 coming at you, maybe even the 1217 area. What that's going to do, because I know the next question is, hey, what's that going to do to the mining equities? Are the mining equities leading the stocks? So, we just got to take a look at each one independently. And if we do that, let's go do that. We take a look at the GDX as an example. So we take a look at the entire mining sector. The GDX is suggesting to you and I is that it wants to move down to 2147. That's the minimum move, 2147 out here. And it could be 2071 would be the level. It's containment area. And that's just simply using our TAS market profiles. If we go look at Stevie's other chart out here, our Ninja Trader platform chart with the other tools that you and I like to use, do we see anything that shows us some type of bottom? There was a TD sequential count 3 or 4 days ago out here. If price were able to close above my red line at 2234, then it might get our interest out here. Then we might say, okay, we come back and say, well, here's what the mining sector is doing, and and therefore we could come up to some conclusion. Our conclusion at this stage here is when we take a look at this chart, that hasn't happened, 2234, and so all you're seeing here is really light volume today, right? 14 million shares. So the GDX and many of the miners look like they want lower price. So if we take a look at Barrick Gold, just as an example, I haven't looked at Barrick Gold for a while. This doesn't look good. You're trading below daily profiles. You're trading below weekly profiles out here. So, yeah, you've had some very small-bodied candles, no question, over the last couple of days. So it tells you that selling has kind of slowed up out here. But the sign of strength was back on the trading session of December 28th, December 29th out here, and that has not been tested. I don't think it's been tested. Let's see. The low is 1552. Have we gotten down there? No, 1553. 1550. Oh, you did get down there, 1551. So that was tested back here on June 20th. So it's trying to test a breakout area, but it's trading below profiles. Not so good. Can you tell us how the red line is? Steve, can you tell us how the red line is computed? Not computer. The red line, my oscillator unchanged line out there, is computed by taking a difference between the exponential moving averages that make up the price oscillator, in this case here 19 and 39, very good, and you take the 19 and you put that moving average, which I do not have on my screen, but if you took the value of the 19 day, in this case here, it's a daily chart we're looking at, moving average, and you added the price oscillator value, that's going to give your oscillator unchanged line. As an example, okay, I'll show you. I'll go ahead. You twist my arm out there. You said please. You didn't say please, but I know you meant to say please. And if I go take a look at the exponential moving average, let's put this out here on the screen. Let's put the 19. There we go. So now you're going to see a line, a black line. So see, who was asking that question? Danny. There's the please. 242504. If you add that and the 17, that's not really 17 out here. It's 17 and change, but you'll get the idea. Just add 24, 25, and 17, you're going to get up to 2442. It's really that simple. And what that is telling me, this red line out here, first of all, it acts as a great level of support or resistance. I mean, it is, you've seen it. It is so cool the way in which it acts out there. And what it tells me in an instant, without really having to have this price oscillator on the screen as well. It tells me first where there's support and resistance, what price is doing, what it's testing out here. Also tells me when the price oscillator is turned down. When that thing turns down below zero, it's curtains out there. And when it turns up above zero, it's, what would you call it? Shades. I don't know. One's got to be curtains. One's got to be shades or something like that. And so that, Danny, does that help you out? Does that answer your question? I hope that it does. And so it's not a moving average. There is no moving average that you can use to emulate that tool. And that is the question that most people ask. There is not. Yes, Basil uses the 9-period. So if you show a 9-period out there, you can see similarities, but it's not. And I use this on intraday charts. You use it for measuring everything with regard to taking a look at day trading or any kind of trading where price is going to go. So you cannot find. I've not been able to find because it doesn't exist, because it's not really based on that moving average. You can't come up with something and say, well, I'm close. You can say you're close, but I'll tell you one thing. It's no cigar. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So someone asked if I could show you maybe some more particulars about Stevie's red line and some of the other tools that we use. So, we were focused on the Dow in the NQ. So let's go there. And again, depending on what time frame, if a trader you are, in this case here, I'm going to use the 2-hour chart of the Dow equity futures contract. So as it was moving to higher ground out here and forming that little shooting star, let me get my crosshairs out here. This was at about 10 o'clock in the evening. That looks like on June the 19th. Is that correct? Yeah, June 19th. Now, as it made that, the very next candle session created that little TD sequential count. So that's blue number 13 out there. Price still above Stevie's red line. So that was not an indication that you should go ahead and jump on the short side. 2 bars later, you also have another TD setup, that little 9 count. All right. This is the way the market talks, walks, and squawks to you and I. The very next candle session, price does what? Falls right below Stevie's red line. Now, that price oscillator is above zero. That's the bottom line out. When I say the bottom line, that's the bottom panel on my screen out here. It's above zero. It's still above zero right now. It's printed out at 30 and change or 29. But you have that little bearish reversal signal. Takes you right into the TAS market profiles out here. Says price ought to find support at the bottom of the profile. It didn't. It busted through it at the 4 o'clock close on the 20th, and that became a resistance zone. Brand new profile forms out here, right? And this one here where the bottom is below the bottom and the top above the top. That's always one where it's not really sure what it really wants to do. But we can see that the bottom acted as resistance. So that was giving you a bearish message. And a brand new profile forms here at about 7:30 in the morning. And this one is below. Both the bottom and top are below the prior bottom and the top out there. And that's a bearish message. What does this morning, when the Dow was moving higher, okay, Dow equity futures contract was moving higher into the 9:30 open. So it's a 2-hour chart. So between 7:30 and 9:30, what was it doing and testing? Stevie's red line. So here's the entire, almost the entire, not the entire set of tools, because what I'm also going to share with you right now on a 2-hour chart, what you're watching for is it is in wave number 7 or potentially in wave number 7 out here. And at wave number 7, it's a 2-hour chart. This one ends at 2. The next one is at 4. So it can continue to extend out here, that 7th wave. And by the way, here's that little 9 count that occurs here at 10 o'clock last night. Was 9 trading inside of 6? Yeah. 6 and never got up to 5, but trading inside of 6. What happened to the market? Just simply moved sideways out there as it was supposed to. And again, test the top of that new TAS profile on the 2-hour basis. Stevie's red line, really, which acted as resistance. And now you know that if a bullish message is going to be generated from the Dow equity futures contract, it needs to close above Stevie's red line on the 2-hour chart, which right now is priced at $21,432. So hopefully that just shows you all the tools that we use here that helps you and I take a look at any chart and identify where price is likely to head to. You and I, we can't guarantee it, but boy, does it make it clear with regard to what is likely taking place inside the market. Very much like yesterday, we talked about how the Dow needed to break, I think it was, 21,402, something like that, in the equity futures contract, and it down to 21,400 and found support last night. That was important message and information for you if that was the contract that you were trading. So you've got the numbers for the day. Watch the spot VIX index, see where that closes. Watch the numbers that we took a look at, both inside the NQ and the Dow, to provide us with information as to what the likely next couple of days may hold for the market. So, folks, stay tuned. Your man and I, David White, our favorite polar bear, he's up next. Because it's Wonderful Wednesday, that means you've got Tom O'Brien from 3 to 5, and I'll be back with you on Terrific Thursday. Have a wonderful Wednesday, and we'll see you tomorrow. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.